Hello everyone, welcome to the Smashy Business Show. Today is Friday, March 21 and it's the year 2025 and we're nearly ending the third quarter. My name is Abdul Majid Awan.
And I'm Ward Ahmed. Ramadan Kareem and happy Mother's Day. And we have a really great show for you today. So for today's headlines, firstly, Mubadala is considering to sell a part of its $1 billion stake in DO. Secondly, ADQ and Energy Capital are partnering to announce this $25 billion data center energy deal. And finally, Adani is in advanced talks to acquire Emaar India for $1.4 billion.
And stay with us till the end of the show because we're going to talk about Chinese delivery app Keeta, which is using penetration pricing to win in the Saudi market. They're now the third largest player in the market after Hunger Station and Jahez. So yeah, we're going to tell you how they're doing it. First of all, the very first story of the day, Mubadala is planning to sell $1 billion stake in DO. They'll only sell a part of it. So Abu Dhabi Sovereign Wealth Fund Mubadala, it's a big company. It's nearly $225 billion in worth. Is reportedly, according to Bloomberg, considering selling a portion of its $1 billion stake in telecom operator DO. Sources quoted by Bloomberg indicate that Mubadala has engaged Emirates NBD, First Abu Dhabi Bank, which we also know as Fab Bank, and Goldman Sachs as advisors for the potential deal. Discussions are still in the early stages and no final decisions have been made on the size or the timing of the sale.
Now, Mubadala currently owns about 10% of DO through Mamura Diversified Global Holding. Now, the last time it reduced its stake was in 2019 when it sold 10%, then worth $630 million to the UAE's Emirates Investment Authority, which remains DO's largest shareholder with over 50%.
And if Mubadala proceeds with the sale, it would add momentum to the growing trend of follow-on equity offerings in the Middle East. These sales are increasingly being used as an alternative to IPOs, helping firms enhance liquidity and boost index inclusion.
Now, the region has seen major follow-on sales recently, including ADNOC raising $2.8 million from its gas unit and Saudi Arabia's $12 billion sell-down of Aramco shares. Now, DO, a key player in the UAE telecom sector, raised $2.4 billion in its 2006 IPO and recently announced its highest ever dividend after a strong 2024 performance. I'm really sorry, guys. I made a mistake there. Yeah. They raised $650 million, which is basically 2.4 billion dirhams.
Yeah. And to be honest, it's a little complicated to understand this, but the reference to IPO and equity selling, it basically means, in very simple words, that when you go for IPO, you ask for money, right? You ask the public for money, take the money and use it for something. But Mubadala is trying to sell a part of its equity. They don't want to go to public. They just want to go to some company, sell them that stake directly, make money and then use it for maybe their own to make DO better, or they can use that money to invest somewhere else. With IPOs, it's very restricted. Because with IPO, you take the money and you have to invest in the same company. You have to invest in, for example, Talabat raised $2 billion. They used it to make Talabat better and then pay some of the debts of Delivery Hero in Germany, but it stays within the company. So Mubadala, trying to sell some part of its stake, they can use that money wherever they want. So it's kind of gaining traction in the market as well. People are selling their equity instead of going for IPOs. So it's a very clever strategy that Mubadala is doing. And we'll see more details whenever they come, we'll tell you. Second story of the day, ADQ and Energy Capital Partners, which is a British company, they've announced $25 billion data center energy deal. So another Abu Dhabi Sovereign Wealth Fund, ADQ, is teaming up with US private equity firm Energy Capital Partners to invest over $25 billion in energy projects, which will power data centers, primarily in the US. So the partnership is 50-50 and will develop 25 gigawatts of new power generation and infrastructure to meet the rising energy demands of hyperscale cloud firms and other industries.
Now, the deal coincides with His Highness Sheikh Tahnoon bin Zayed Al Nahyan's visit to the U.S., where he met with President Donald Trump to discuss AI and infrastructure collaborations. Now, the UAE, it's really a key U.S. security ally, and it's actively seeking access to American technology as it pushes to become a global AI hub and diversify beyond oil. And when I say seeking American technology, they're basically they're trying to ease the restrictions that America has placed on them on NVIDIA chips, and they're trying to access more of them so that they could actually build more data centers here in the UAE and actually advance our AI infrastructure.
Yeah, and ADQ, which manages nearly 225 billion in asset, continues to expand across energy, critical minerals, transport, logistics, owning stakes in major companies like Etihad Airways. And this investment aligns with its broader strategy of strengthening the UAE's foothold in high-tech industries. And very interestingly, ADQ is also chaired by His Highness Sheikh Tanoon Mubadala. He also sits on the board seat. So whenever you talk about AI or technology,
He's always involved.
He's somehow always involved.
He's always somehow linked.
Yeah.
But Majid, you know what was really big news that I feel like we didn't give it what it deserves? It's the fact that so Balabi and Core 42 and Microsoft, they all actually partnered to build this sovereign cloud. And basically what they're trying to do, in simple terms, is that they're trying to make Abu Dhabi's government an AI native government. And this entire deal was actually put together during His Highness Sheikh Tahnoon's tour in Washington, which is currently ongoing, by the way. There are more updates that are coming. But I just find that really interesting. I mean, what is an AI government going to look like? Other than, employees using more AI to, finish all their work quicker. What do you think that's going to look like?
It's basically the idea is that usually you use computing programs. They are kind of like AI, but you use computing programs for digital transactions. So when you go to your ICP app or any app that you use for Abu Dhabi government processes, the process takes time because the computing power is low. So when you incorporate AI into it, you remove certain barriers. So if it's a 5-step procedure where in 2 steps humans are involved, they'll involve AI in one of the steps or maybe in 2 of the steps. So the process will become smoother and faster. So that is how they will incorporate the sovereign cloud system that they're incorporating. In very simple terms, it will make it faster, because it allows more transactions per second. So more transactions per second makes it faster. That's it. So that's the whole idea. So AI native government, they're incorporating AI into their government digital services. And Dubai also has this, but they haven't done it like on a full scale, completely like full scale. Right now, even now, if you have some Dubai, they've digitalized it, but AI incorporation is still like not 100%.
But speaking of, who's involved in all of this, it's not just ADQ, which is chaired by His Highness Sheikh Tahnoon, which is investing $25 billion into, data centers in the U.S. It's also, Emirati billionaire Hussein Sajwani, founder of the Damak Group. Just at the beginning of the year, I believe, he invested $20 billion to build data centers across the U.S. And basically, the difference between what Sajwani is doing and what ADQ and Energy Capital is doing is that Sajwani is actually, he's a part of, his investment is going to go into building the data centers, while what ADQ and Energy Capital are doing, that's a part of supplying the energy to these data centers and supplying the energy in terms of giving them the investment that they need to build solar panels, anything that they need to really power the energy required for these data centers. And, see, Majid, when I take a look at this now, just to put it out there, the reason why His Highness Sheikh Tahnoon is in Washington is it's because it's a part of a larger, broader strategy to ensure that the UAE has access more than NVIDIA chips, as I previously stated. And the way that I see this, ADQ putting in this $25 billion, I do believe that it's
half
earnest.
of it. 25, half.
I see.
So 25, half will be by ADQ and half by ECP.
Okay.
Yeah.
So, them putting, about $12.5 billion, I believe that it's earnest, but I also believe that it's also about a part of a broader strategy to make the U.S. actually ease their chip restrictions. And I think it's give and take. So I can't wait to actually see what happens after His Highness Sheikh Tahnoon comes back from Washington, and the kind of deals that the UAE is going to receive and how they're going to collaborate with the US. That's going to be really exciting to see. I don't know if we mentioned this, but just this morning, we published a story about how His Highness Sheikh Tahnoon has just met with Larry Fink, the CEO of BlackRock, the CEO of Microsoft, the CEO of NVIDIA himself, and who was also there? The CEO of G42, by the way, is also there. I feel like we don't mention him, but he's there and he's doing great. So they just all met together this morning. There was a meeting with Elon Musk via video call, President Trump, a lot of characters. I believe Jeff Bezos and Mark Zuckerberg coming up soon, according to Semaphore. But that's what's going on in Washington right now.
In very simple words, whatever you said, it's very interesting because ADQ and the MAC both are investing in real estate. If you look very at the core of it, because building data centers, you need land to build them on, so that's real estate investment. ADQ building energy center where, I don't know, they'll use hydro energy, solar energy, or whatever the normal conventional form of energy, the 25 gigawatt number that they've said. So the thing is, both of them are investing in real estate in the US. So they're going to own land, build a factory, make energy and provide it for data centers. And Hussain Sajwani is going to build a data center on that land. So it's basic at its very core, investing in real estate in the US, and which is very interesting and very nicely well thought out, because these real estate investments, you remember when we did a lot of stories on Hussain Sajwani investing $20 billion, there was this one part where he said that real estate investments are very safe bets because you only provide 20% of the money. The rest you source from banks or from someone. So it's a very safe bet. You don't put all your money in. It's someone else's money, and eventually when you make money from your project, you keep paying off the other people, and eventually it becomes a profitable venture for you. So it's very complicated, but very interesting that how these guys are investing.
It's interesting how he thinks, because Majid, for me, I'll never forget when I was at the Mega Campus Summit, sitting there watching Robert Kiyosaki and speaking to him personally, and when he told me that, you're not supposed to be afraid of debt. You're not supposed to be afraid of that. And the best of businessmen are men who use debt to their advantage. And I think that Sajwani, he's such a good prime example of that. He really is. But you know what this also reminds me of, by the way? We're always discussing how, these billionaires, they're out for themselves and they're out for their money. But just very recently, there was a story on how, I believe His Highness Sheikh Hamdan, Crown Prince of Dubai, he announced it on X, how him and a bunch of real estate companies, they collabed to basically improve mosque infrastructure across the UAE, and Hussain Sajwani was very vocal
the
about
MAC
it.
is one of the partners in that. A lot of other firms are. Bengati recently paid a lot of money for the father endowment campaign. So it's kind of like all these players, they know they're big. They know their value in this country. And the good thing is that they contribute to a lot of these ventures where the government is trying to do something on the social aspect. They want to improve people's life, improve mosque, improve anything. These guys always come in and give their not 2 cents, millions.
They're certainly good there. There's certainly a lot of good.
They're making their part of the contribution. And yes, good segue into the third story from real estate to real estate. Emaar India, which started in 2005, is maybe soon going to be owned by the second richest Indian. So a major real estate deal could be in the works, as Indian billionaire Gautam Adani is in advanced negotiations to acquire Emaar India, which is the Indian unit of Dubai-based Emaar Group, which is headed by, obviously, Mr. Al-Abbar, Mohammed Al-Abbar. And the deal could be worth potentially $1.4 billion.
Now, sources say that the deal could actually include a $400 million equity infusion by an unlisted Adani unit. Now, if finalized, this acquisition would significantly expand Adani's real estate portfolio, which already spans 24 million square feet now of developed property and 61 million square feet under construction.
And this comes as Adani continues its aggressive expansion in India's real estate sector. The company recently secured a massive $4.3 billion housing redevelopment project in Mumbai and is leading the revamp of Mumbai's Dharavi slum, one of the world's largest slums. They're revamping it.
Now, meanwhile, Emaar had confirmed earlier this year that it was exploring a potential sale of its India unit and had been in discussions with Adani and other parties. Now, talks are ongoing, and while a deal could be reached as early as April, nothing is confirmed yet. But really, Majid, when I'm taking a look at this story, it's impressive to see what Adani is doing. However, to me, Mohammed Al Abbar's expansion strategy is really good. His expansion strategy, he's not just trying to expand into Egypt, he's also trying to expand into India. He's also trying to expand into, was it Budapest?
Hungary, Budapest.
Yeah, into Budapest. So what I'm seeing here is this is a very aggressive expansion strategy. And honestly, I can't wait to see what goes on with it. But what do you think?
To be honest, the earliest memory of Emaar expansion is Emaar, Pakistan. They have 3 projects in Pakistan, one in Karachi, one in Islamabad, and one, if I'm not wrong, in Lahore. And one is on the mountaintop, one is at the seafront. They literally bought one part of the Karachi beach, which they made like a separate beach for only their development. I'm still not sure about the Lahore project, but it's kind of like in the city. So their projects are not simply just making nice buildings, big buildings. Their projects are mainly giving a lifestyle to people. And even in India, when they went in 2005, whatever they provided was not, even if it was seen in India, it wasn't seen at that scale. And even in Dubai right now, if you go through this part where Dubai Hills Mall part in there, Dubai South, I think, they have one of Emaar whole business something center. I forgot the name. But when you look at the project just being built, you're like, they're building something big. So Emaar is, I don't know why they're selling India business. Maybe it's not making enough money, or maybe they've built the projects, taken the money from each project, because you earn a premium on the project that you're building as a builder. So they've earned that. They're just giving now the business, the name and the operating structure to Adani. Because 1.4 billion, I don't think that's the worth of any building in India for Emaar projects. So he's made the money. I think it's a good, nice exit for him from the Indian market, because the Indian local players are very strong. I remember we did a story on Carrefour trying to get back to India. Carrefour went to India at some point in 2011 or 10. They couldn't survive for 2 years. They backed out of India because the local players are so strong. So Carrefour backed out. I think
and the Indian population is so
yeah,
too.
and they prefer local brands and local stuff. So they're very supportive of that. So I think Emaar is facing the same problem. They're facing so much strict competition from the local players that they're like, let's just exit when the time is good and we can make some money from it.
You know what it could also be, Majid, since, as you mentioned, like that $1.4 billion number, it seems too small for such an, it's Emaar, India. But what I also think it could be, coupled up with what you just suggested, is it could also be, that Emaar, because we're seeing what they're doing. They're trying to be a part of a new Cairo. They're trying to be a part of a mini Dubai that they're trying to build
in Budapest,
a part of a neighborhood in Budapest. So I think what this also could be is that they are trying to focus on some of their other expansions more, and that maybe they don't have the resources and teams to actually keep a very careful eye on their business abroad in India. Because I feel like what happens often with businesses is that obviously the location that you grow it from, it will be the most successful. Where you expand it, you as a person, it's very difficult to hire a group of people, put them in another country and trust them. You don't know what's going on there. But Majid, you know how you said that he's always building these glamorous things. I mean, he did build Emaar did build Burj Khalifa.
They have their name on
However, not everyone is actually accepting of that. And, we saw this example in Budapest in Hungary. And basically what happened is that Mohammed Al Abbar's Eagle Hills, so a part of Mohammed Al Abbar's portfolio, there's Emaar, and then there's Noon, and then there's Eagle Hills. It's a real estate company. And basically what they did is that they bought this neighborhood in Budapest. They bought it for $128 million. And what they're trying to do with that neighborhood is they're trying to turn it into a mini Dubai. And basically what happened is that officials in Budapest are actually pushing back on this. They don't like this decision.
Yeah.
They actually...
So the mayors
Yeah.
got in, and they have the legal advantage of bidding first. So now they're bidding first. So they bid and they won the bid, but they have to come up with the money. So we don't know if they've come up with the money or will they come up with the money. But yeah, let's see how it goes. The main idea is that I think it's reinvestment strategy. He's taking the money out from one market, putting it onto other markets, which he thinks are ripe for like growth. Indian market has, to be honest, quite likely matured. You won't get, like, if you put in 100,000, you won't get like 300,000 out of it. Now it's so matured that investments are not giving you that much ROI. So yeah, we'll see. Whatever happens, we'll keep you updated. For our How Did They Do It section, we've chosen a very recent example. We did a story yesterday about Keeta, which is a Chinese delivery service, which is owned by the Chinese giant Meituan. And we found that they're using penetration pricing, which is a financial business term, to win in the Saudi market. So the very first question is, what is penetration pricing? So penetration pricing is a strategy where a company enters a market by offering very low prices to attract customers quickly. The goal is to gain market share fast, build loyalty, and then adjust pricing later.
You know what's an example of a company that actually does this? Bleben.
Yeah.
So Bleben, it's a
they're not
homegrown. They are. I do
Yeah.
believe they're cheap.
Okay.
I'll
Compared to a lot of brands, now if I look at it,
Yeah, I'll explain why. So basically, Bleben, it's an Egypt homegrown brand, and they've actually expanded all over the Gulf.
Yeah.
We've recently distributed this ad that they did for Ramadan, where they were apologizing to people for how good Bleben is, and they even hinted at a European expansion, which I was discussing with my family, and my dad was like, "No way will this work." He was like, no, like Europeans are too healthy to eat Bleben, which I completely disagree with. But beside the point, Bleben, they basically they sell desserts like kushari, where they
have
basically
a shop here in Barsha, which I have been to once.
Yeah.
But they have multiple shops, I guess, right?
It's really good, and basically for they have the kushari, where basically they mix ruz bleben, so it's like, you know, like milk with rice, I believe, oats. They mix it with kunafa. Yeah, they mix it with kunafa, and then like toppings like pistachio, kunafa, lotus, Nutella, and then they also do this thing called ashtuta. It's like a cake. It's a very light cake, but the reason why Bleben has grown to be as big as it has, because they clearly use penetration pricing. I mean, see, imagine it may be like 30 dirhams for a dessert. It is a lot, but at least you're not like going to one of those expensive cafes where you pay 30 dirhams for a dessert and then you get like a tiny slice of cake. You're paying 30 dirhams to get like a big box. And that box, by the way, it lasts you more than a day. And you can share it with people. So this is what they price really well. And, they give you a large quantity. But how is actually Keeta in Saudi using penetration pricing? So Keeta actually entered Saudi Arabia in October 2023 and immediately slashed prices, offering free delivery, discounts, and vouchers worth up to $26, so 100 riyal. And this made ordering from Keeta cheaper than competitors like Hunger Station and Jahez, leading to a massive adoption. Now they got 3.6 million downloads in just 4 months.
And by pricing aggressively low, Keeta quickly became the third largest platform now, overtaking 10 plus smaller rivals. This is exactly how it succeeded in Hong Kong as well, where it forced Deliveroo out in just 1 year. So imagine, they've done this, they know the playbook, they've done this in Hong Kong, kicked Deliveroo out of the country, and now they're doing it in Saudi Arabia. And Keeta has also disrupted the market. The competitors are reacting with their own discounts, which is good at the end of the day for consumer, I think. They get so many discounts on so many apps. And this shows that penetration pricing works when you enter a crowded market, but eventually you have to, it's not sustainable over longer period, but it's very good, I guess, for entering a market. You just enter, disrupt the market, and then eventually you slowly and gradually raise the price.
Build loyalty.
Yeah.
But you know what number I think out of the entire story of Keeta that I actually found very impressive? It's the fact that, you know, after just 4 months, they own 10% of the market. I mean, that is some, you know, that's a lot of growth. And, you know, correct me if I'm right, it's a startup. It's
Yeah.
a startup, and you know, it just entered into Saudi Arabia in October 2023.
Yeah.
I mean, this
It's
is
a new market for Keeta. They've done it.
Yeah.
I think you remember that we also tried the Keeta drone delivery in Silicon Oasis recently, where His Highness Sheikh Hamdan was there. And we saw a Keeta drone delivering something from someplace to the box in front of His Highness Sheikh Hamdan, the Dubai Crown Prince, and he took that delivery. I think it was coffee that was delivered. And so they're using not only penetration pricing, there's a lot of strategies, but to disrupt the Saudi market specifically, they entered with penetration pricing. And drone delivery is one of the things that they want to do completely in the future. To be honest, drone delivery, still a lot of people are not talking about it, but I think in the next 2-3 years, when AI becomes more powerful and better and drones become better, we will see a lot of drone delivery happening in Dubai, especially because we have air taxis coming. The whole airspace is
Imagine.
going to be full.
We're definitely going to be seeing a lot of flour and chocolate deliveries
Yeah.
today for Mother's Day.
Yeah.
You know, the pressure is real. I still haven't figured out what to get my mom, but you know how there's just always this saying that behind a great man, there's always like a great woman.
Yeah.
Do you agree with it?
I
totally
agree.
agree with it.
I agree.
I totally agree with it. To all the mothers today,
Yeah.
please have a beautiful day. We're so thankful for every single one of you. I love you, Mom. You're
Yeah.
great. You're amazing.
Yeah,
and,
we love you, moms, all the moms in the world, and ours, like mine especially. I love you more than every other mom, but
Yeah.
yeah, all the moms in the world,
Yeah,
thank you so
and,
much for
that's
being the
it.
best people on the planet, right?
Yes, for being the kindest,
Yeah.
absolutely the best. And that's it for today's Smashy Business Show. If you enjoyed the show, make sure to follow us on all our social media platforms. You'll find us as Smashy Business everywhere.
And don't forget, we also have a daily business newsletter packed with latest news and trends and deep dives. You can subscribe to it using the link in the description.
This is the Smashy Business Show, a Smashy Business production, a part of the Augustus Media Podcast Network. We're really proud to have 1.5 million monthly listeners across all platforms. And if you're one of them, a really huge thank you for being part of our journey. Have a lovely day and have
Bye-bye.
a great weekend.